Hi, this is Will Cook with the Will Cook Group. Welcome back to my video blog. Today we're going to talk about what's going on with home prices. With a substantial increase in mortgage rates, many home sellers have been asking, will this finally make home prices drop in a substantial way? Well, it's not that cut and dry. In a market where rates are predicted to rise further this year, buyer affordability could take a serious hit. To give you a better idea of whether your home is expected to lose value in the coming months, I'm going to address 4 key points that explain what's happening to buyers in the real estate market and what you can expect in the future if you're considering selling your home. The first point is more expensive mortgages. A higher interest rate means a higher loan payment. The rate at which rates have been rising is astounding. They're up 2% since the start of the year, which means that the average homebuyer's affordability has dropped by 20%. This has already priced some buyers out of the market, and if rates continue to rise as expected, it will price out even more of them. This is going to make the pool of potential buyers for your home much smaller, resulting in fewer offers and diminished demand. The second point I want to talk about is increased rental rates. So one often overlooked factor in all of this is the rental rates. As homeownership becomes more expensive and more out of reach for buyers, rental rates and rental demand is going to increase, which means that rent prices are going to jump as well. The third point is that supply is still short. So although homes are more expensive, the demand for them is still high, and because the increased interest rates have also caused more home sellers to decide to stay in their homes longer. And our typical surge of inventory that occurs usually at this time of year just isn't happening. So low supply is good news for homeowners because it will keep your property values propped up. And the final point I want to talk about is that there is no indication that we're headed for a real estate market crash. Some buyers and sellers are rushing to the market in fear of an impending crash. However, there aren't many parallels between this market and that of 2008 when the last crash occurred. That crisis was the result of irresponsible lending. And since then, underwriting standards have tightened dramatically. The current frenzied market, or semi-frenzied market, has been brought on by basic supply and demand, and any kind of crash is pretty unlikely. According to Brandon Heifel, the CEO of Catalyst Mortgage, he says, "I think we're now going to start seeing individual markets potentially have some slowdown. My reasoning is we still have extremely low inventory, but it's not going to go the other way and crash." Although rising rates are going to cause some buyers to leave the market entirely, all of the evidence that we've seen on the ground points to home values continuing to appreciate as long as our supply remains low. And this is good news for you if you're thinking about selling your home in the coming months. As always, and especially in this market, it's important to work with an experienced agent, and we'd like to apply for the job. If you have any questions or you'd like to discuss your unique situation, please give us a call. We'd love to talk to you. Call us, email us, or text us. Also, if you have any other real estate related topics or questions that we can answer, reach out with those as well, and we'll make a video about it. Thank you so much for watching. See you next time.